afternoon, ladies and gentlemen. My name is Gary Peart. I'm the Chief Executive Officer of Mayberry Investments Limited, and I'll be your host this afternoon. So today, we're going to be having an investor briefing specifically on the second quarter results to June 30, 2020 for Mayberry Group Limited. For those of our investors who are new, you would realize that Mayberry Group involves Mayberry Jamaica, which is our local security dealer. That's regulated by the Financial Services Commission and the Bank of Jamaica, as well as the Jamaica Stock Exchange. We also have a St. Lucian subsidiary, which is called Mayberry Jamaican Equities, and we also have another one called Whitebase. So the group numbers that we've seen, that we've put out, we sent out a blurb with my signature, and I explained what basically happened. But we have been approached by investors who wanted to get a better feel for, what's behind the numbers and what's likely to happen. And as usual, Mayberry always listens to its stakeholders, including you, our shareholders. So today, what we're going to have is, I've done a very simple PowerPoint presentation, which I'll carry you through. And then after I finish the PowerPoint presentation, we're going to take some questions. We've already started to get questions already. And also, just to let you know, we're joined today by the Executive Chairman of Mayberry Investments, Mr. Christopher Berry. So I'll carry you through the presentation, and then after the presentation, Chris will say a couple words, and both himself and myself, to the extent that we can answer, will answer your questions. And hopefully when we're finished, you'll be able to see where the future value will be coming from Mayberry. So let's get to it. So Mayberry's vision is simply transforming lives positively through lasting relationships. And as we've said before, we're a company that's mainly about relationships, and we believe with our relationships, we can create a lot of wealth for you, our stakeholders, customers, and friends alike. So as I said before, I'm going to carry you through the second quarter of 2020. Then I'll carry you through the portfolio highlights of MJ, which was also a specific request by some investors. We'll speak about the MJ stock price and ultimately the way forward. So for the second quarter, we saw a wonderful rebound from the first quarter. As you all are aware, because of COVID, we saw where the stock exchange had a significant decline as at March 31st. And we saw that in the results that we put out. For the June quarter, we saw a nice rebound. And for the quarter, we recorded $469 million in comprehensive income. And the net book value was approximately $7.83. What drove that fundamentally was a rebound in the stock prices of certain stocks during the second quarter. And also, one of the things, and I think is important, because this actually came up when we did the IPO for Mayberry Jamaican Equities. So whilst the prospectus did not speak specifically to a waterfall, it's something that we practice in the sense that the incentive fee that is charged on the comprehensive increasing the comprehensive income from Mayberry Jamaican Equities will only be charged once that value supersedes the value before. So in simple words, if the value of the portfolio went to $10 and the fee was charged up to $10, if the portfolio loses value to say $6 and then rebounds to $9, an incentive fee would not be payable on the move from $6 to $9. An incentive fee would only be payable if the amount rises above $10. So what that means going forward is that there's a significant expense item that won't be charged to Mayberry Jamaican Equities unless or until the market gets back above where it was as at the middle of March. And that is a big benefit for the Mayberry Jamaican Equities shareholders, and it speaks to the fairness of the incentive structure. Because what the managers are saying is that we're being incentivized to increase your value, and if we're not increasing the value, then we're not expected to be paid. So that was one of the big reduction in expenses for the quarter. For the quarter, when you compare the second quarter for 2018, 2019, and 2020, we would have seen that Mayberry Jamaican Equities, the result was $1.6 billion in 2018, It fell to 1.4 billion in 2019. And even though it has come out at 468 million in 2020, that's a significant turnaround relative to the first quarter. And put simply, as at the end of 2018, the second quarter 2018, the shareholders' equity, or the value of the company, was $11.7 billion. It grew to $15.6 billion in 2019. And as of 2020, it's still a healthy $9.4 billion, despite the fall off in the first quarter. And again, this graph shows the movement. So we run Mayberry Jamaica on equities based on what we refer to as NAV, net asset value. Some people look at it as net book value. So as at the second quarter 2018, the net book value of the business was $9.76. It grew to $13 in 2019. And as at 2020, for the period, which is just a quarter alone, the value of the portfolio is $7.83, which is still above the IPO when we came out with the stock. Further highlights. So I just spoke about the quarter itself. When we take the year-to-date numbers to June, this is what we're seeing. The net book value is $8.85, and that translates to $10.6 billion in shareholders' equity. So notwithstanding the fall off in the stock market, the company still has healthy capital at around $10.6 billion. So again, when you look on the quarters, 2019, it was 954 million. So, and 2020, we came out at 774. So what you're seeing is that we had a relatively good quarter, notwithstanding COVID, because what we're seeing is that outturn, and especially with the elimination of the incentive fee, you're basically almost flat on the year before quarter. So shareholders' equity, 2019, 17.4 billion. After the fall off in the market, we're seeing 10.6 billion now, which again, as I said, is pretty healthy. This is a question that a lot of people had asked about, and it's a portfolio. There are many people who are always interested in what we're going to do next, what's our outlook, etc. And what we have here are our top 10 holdings. It's led by Supreme Ventures. Based on the price movements, the holdings represent approximately 48% of the portfolio. It's closely followed by Derrimon, Wigton, Carib Cement. And where we are now, we've actually seen a rebound in the last quarter in the price of Supreme Ventures, even though their results showed a reduction. And the reality is that the market is expecting that turnaround to continue. We expect to continue receiving very healthy dividends from this business, and we think the expansion potential for Supreme Ventures is pretty high. Derrimon is a very interesting position that we've taken in the last 6 months. Again, we think they're pretty innovative in the distribution space. They have a lot of plans for expansion, and we think as we move away from COVID and things normalize, you're going to see a lot of that expansion come into play. Notwithstanding, Derrimon has actually benefited significantly during COVID, as seen by their second quarter results. Wigton is a position that we've spoken a lot about. We did that IPO as well as Derrimon's IPO. And Wigton came out and basically said, the COVID hasn't really affected them as much. They have contracts in place with JPS, so they get paid on a weighted average. They're not paid in US dollars, but they're paid based on a derivative of the US dollars. So they've continued to do well. We've actually seen where their profits have moved up. And we expect that once they get expansion opportunities, that's a start that is going to do very, very well. Carib Cement, for the second quarter, we were surprised by how healthy those numbers were. And indications, if you drive around Kingston especially, the amount of cranes that we're seeing suggests that a lot of cement is being consumed. So we think in the short term, the price of Carib Cement should turn around and rebound quite nicely. Lasco Financial, they're going through some issues, but they're working on it. They have a competent management team, and we believe that they have the necessary turnaround strategies in place to deal with that. Caribbean Producers, it's interesting because today they gave me a bottle of Fiji water, Tom Tyler and Mark Hart. That's supposed to be the best water in the world, 450 years old. But they were hammered by COVID. But the beautiful thing is that they have capital and they're poised. What they've done during COVID is that they found a way to really expand their retail base. They're trying to move invention. It became one of the hottest things in Jamaica, trying to get their basket. And I think they've learned from that, and I wouldn't be surprised if some of their expansion involves a further foray into the retail side of things. But I think as COVID abates and the tourism and the hotel sector reopens, we expect to see great things from Caribbean producers. Some argue the price now is a great price. So broilers, have been hit hard, but again, with the turnaround, we expect them to move forward. Alaska distributors, they just put out some very, very good results. Their profit is up almost 100% year over year, and we expect that to continue, which seems to be an interesting theme. All of these companies that distribute food and are in that sector where people have to have no choice, they've done pretty well. And we think we are pretty well positioned with them. So that's our core holdings. We think they have held up pretty well, and we expect great things from them going forward. This chart is a chart that I've always said to shareholders of MJE, this is what you need to focus on, because anytime you should not have a situation where that orange line is above the blue line. The orange line is the net asset value. What does that mean? If you sold all the stock in MJE, you would get a price that is along that orange line. So it doesn't make any sense for the actual market price to be trading below that, right? Because unless the market is saying we believe that your stock price, when you try to liquidate it, that will not happen. One of the questions people have asked me about is they feel that when you have a large position in a stock, to get out of the stock, you have to sell at a discount. But one of the things people haven't realized is that Mayberry's philosophy of investing in value and value for the long term, what invariably happens is that we end up having strategic positions in companies. So when the opportunity arises, it's not necessarily that you have to go to the market to find an average retail person. When that strategic person comes in and sees a strategic stake, they will actually pay you a premium at times. So the long and short of it is that we believe that you should always see a long-term situation of the blue line, which is the market price, that should be trading above the orange line, which is the NAV. But in short, anytime you see the blue line below the NAV, we think it's a buying opportunity. Thank you. The way forward. So we've kind of truncated this, and obviously the first one is that we're looking to increase profits. It's about rebounding. We think the market will be a little flat, if not declining, for the rest of the year. But how we position ourselves in different companies is going to be key. We think that depending on when you find a vaccine, depending on how we manage COVID, is going to determine the point and the pace of the recovery. But we stand ready to take advantage of that when that occurs. Mayberry's strength has always been about our customers. And we have done a very good job in attracting customers over the... Oh, right. We've done a very good job of attracting customers over time, and we will continue to do so, especially with our new digital platform. Okay? And last one, as I said, learning and growth. We believe as a business, people might see us as experts, but every day we ask questions because we try to learn something new every day. And we will continue to do that because ultimately we're trying to create value for you, our shareholder, you, our customer, you, our stakeholders. At this point, I want to turn over to Chris to see if he has a word or two to say. Mr. Berry?
Yes, Mr. Peart.
You have anything to add, or you want to go to the questions?
I think we should jump into the questions.
Okay. So we have been getting questions. I have a couple here that I'll read. But I think just to recap, for the second quarter, Mayberry the results show that we're on the path of recovery. The key highlights is that the MJE, or Mayberry as a group, has $10.6 billion in equity. I mean, even though it's down, it's still a little bit more healthy than the average person. And there was a key point that I missed in my conversation. Mayberry Jamaican equities is currently sitting on approximately $1 billion, a little bit below $1 billion. So it puts the business in a position where if there are opportunities that arise in the marketplace, if we continue to see fallout in prices, the company has sufficient liquidity to take advantage of those prices. Because what we are looking for and what we share with you is what I refer to as an inflection point. The market probably has some more downside, but there's a point at which that downside will stop and then we start to move again. That's that inflection point. At that inflection point, you want to be in cash, whether in Jamaica or US, preferably US based on what is happening right now. And MJE is exactly in that position. So MJE and the management team are seeking opportunities to take advantage, and we're on the hunt for that. So the first question that I've received is, we see there's a significant increase in dividend income in the second quarter of 2020 compared to the second quarter of 2019. What was the biggest contributing factor to this? The answer to that was primarily Supreme Ventures. The Supreme Ventures had a record first quarter, and they paid a record dividend in that first quarter. So relative to the dividend they paid, the dividend MJE received last year, the dividend from SVL this year was substantially larger than the same one last year, as well as we saw additional increase in dividend income from some other stocks. So the second question is, what are the chances of dividend income seeing an even greater boost in the second quarter of 2020? Second quarter of 2021. I'm cautiously optimistic that you will see an even bigger boost, because I believe by the time you get to June 2021, most companies would have a very clear feel and grasp of what is required to deal with digitization, with COVID. And so prior to June next year, I think all the plans will be in place. You already have some companies that have navigated it very well. They'll continue to do even better. You'll have some who were hit, and they'll be coming back very, very aggressively. And I think that is going to show in their cash and the dividends that they look at for next year. So the third question is, one of your biggest goals is to reduce operating expenses. How do you see digitization playing an even bigger role in achieving this in the near future? Well, we think digitization is everything. But let me pause and ask Chris to answer this one, because this is one of his favorite topics. Chris.
Well, I don't really see digitization cutting costs much. I think it will actually increase costs, but it will expand capacity significantly. So we will have capability to take on many more clients than what we have now. Right now, we only have one branch, and we are constrained by physical space and people's ability to physically access the service. Once we digitize, that boundary is no longer there. So we'll be able to handle a lot more clients with basically the same cost.
Thanks, Chris. So the fourth question, to achieve reduced operating expenses through digitization will also be reliant on the customer's response to digitization. How have clients and potential clients responded so far, and what might this mean going forward? So the biggest response I've gotten from customers is that we want more. I give you a simple example. Mayberry was one of the first companies that launched an app where you could view your statements. And our customers have just loved that app, because they're customers who would call in or even come into the office to just get a balance. Now, anywhere in the world they are, anywhere in Jamaica they are, they can log in and they get a balance. We've now upgraded that app to where you can actually you can put in orders to buy and sell stocks. And every other month we put on an additional service. And what we're finding from the customer is that, as I said, they just want more and more. The ease with which they can do business, and what we've seen, it has made us become even closer to our customers, Because what happens is that when they decide to interact with you, it's after they have scrutinized and analyzed their position, and then the quality of the conversation about that next investment opportunity is significantly higher. So we think the response has been great. I'm saying it has been great, and we expect it to get greater as we put more and more services onto the platform. What that will do ultimately is that you will see a significant reduction in certain things like utilities, your papers, etc., which also ends up being a bit lower when you combine work from home with an app like this. So, we're seeing the benefits of it, and we expect to continue to see the benefits of it as we start to put in more and more complex services on top of the app. So, those are the questions I've gotten. I haven't seen any more. I want to thank you all for tuning in. I want to first thank Mr. Chris Berry for calling in today and helping to make this presentation an insightful one. Of course, I must thank all of you, our valued shareholders, investors, and other members of the Mayberry family, without whom this company would not remain a success all of these 35 years. I hope the information presented and discussed today will serve to encourage you to work twice as hard in helping us to achieve our goals. No matter the obstacles, we are determined to continue pushing forward along the path to financial independence. Thank you all, and please enjoy the rest of your day.